Hey guys, how's it going? Today I want to talk to you a little bit about options trading and some of the pros and cons that I've assessed so far. Let's start with some of the cons, and then I can sell you on the pros in a minute. So there's high leverage when you're trading with options, so there is potential for big losses. Generally, if you're smart, you should be pulling out with a 20% loss, and you should be pulling out with a 60% profit. Go a little higher if you want, but don't let greed get the worst of you. Another thing that sucks is you have higher fees, or at least you have an additional fee to normal trading. Scottrade charges $7 per trade, but with options contracts, you also pay an additional $1.95 per contract. So if you buy 10 contracts at $1.95, then that's going to be about $20 plus $7 to trade, so that's $27 to buy, $27 to sell. And you add that up, that's about $54, $55 in fees. So if you're trading with only a couple $100, those fees will eat up a lot of your profits. Now, the more money you have, the less relevant the fees are, because you're trading with more money, and $2 a contract doesn't seem like as much when you have 20 contracts. Even though you have paid, $2 per contract, you have much higher gains for the movement of the stock. Also, there's no dividends, so that's another con. You're not a holder, you're not a shareholder of stocks, so you're not going to be paid dividends like the kind of trader who, buys a company and stays in it and, gets paid a percentage per share each month. Now let's talk about the pros and why I like options trading. So just like I said before, you're high leveraged, and this means you can have some big losses, but you can get much bigger profits. So the potential profit is much higher than the loss, in my opinion. Your contracts can increase by over 100%, 150% even, and your money, increases that much. And usually, if you're smart, you sell out or you pull out at least 15, 20% down, or maybe you pull out when you're, even if you pull out when you're 50% down, you only lost half. But you had the potential to gain 100% or more. Now those are extreme numbers, but it happens. So you have a high risk-reward ratio. It's also, you can make profits in a good or bad market. People who hold stocks long term, when the market goes down, their stock's value goes down, and their money, they're kind of stuck there. Their money sits there, and they don't exactly, they don't want to leave, they don't want to pull out with such big losses, so they let it stay there, and it's kind of, their money is in place and not working for them. So you can make money in a rally with call options. You can make money in a sell-off with put options. So you can play both sides of the trade with options contracts. So now put options can have an even higher profit potential, in my opinion, than calls. Even though rallies can be pretty extreme, sell-offs can be more extreme. You'll see the markets rally 80 points or 50 points or 40 points or 100 points, but you'll see sell-offs of 200 points, 500 points, massive sell-offs, and they're usually pretty predictable. So you can buy put options at certain positions, and you can tell based on the news if there's going to be a big sell-off on that particular company or the overall market. So puts have high potential, and you make money even when everything else is selling off. That's why I like options trading, guys. Those are some of the pros and cons that I've assessed so far. If you like this video, please hit the like button, comment, subscribe. I'll be posting more videos, and give me some advice. I'd love to hear some pros and some cons in the comment section. Thanks, guys. Have a great day.